Hello guys, and welcome to my YouTube channel once again. In this video I want to show you how you can trade breakout, what you should expect in the market if you want to actually trade breakout, and how you are supposed to enter the trade, how you're supposed to get a setup and get an entry for trading if you want to trade breakouts. All right, so the trading of breakout can be done on almost any time frame, even from the daily time frame or monthly time frame. Like if I go to the daily time frame, I am on crash 300 index. I am on crash 300 index. If I want to trade breakout, you can trade breakout either uh, based on trend lines, by drawing trend lines, or by looking for areas of consolidation. When you notice the market has been consolidating for a while, so you are waiting for when it will come out of the consolidation, then that's going to be a breakout. Then how are you going to enter the trade with that? Or market has been trending in a certain direction, and you notice the market has broken out of the trend. That's a breakout, and you are looking for an opportunity to go in to join that trade. Okay, so that's what I'm going to do here in this video. Right here on this crash 300 and daily time frame, you can see the market has been selling for a while. So first of all, let me show you this. Let me start with the trend line aspect of it. On this time frame, you can see we have this. You can see we have this on the chart. You can see the three torches. The first one here, the second one here, and this is the third one here at this point. So in this case, it's only if the market can go above this trend line, then we will say there is a breakout. Except the market can go above this trend line before there is a breakout on this particular time frame, based on the structure we have here. And also, even if before the market gets to that place, there's something you need to also see here. Let me show you guys these things, because let's say you want to chart, then you're able to capture this particular movement right here. Maybe this movement, you can see this is also a breakout, because by the time the market will have created this, after creating this high, it came down and started moving, giving us all these other little highs. Then you're able to place a trend line to join these 2 points. The breakout on this one is this another breakout. Actually, it is a breakout, but in this case you should also consider this particular trend line, that there's no way market can easily just move and go above this trend line. So whatever you're going to do, the kind of trades you're going to take, you have to consider the trend line that is above here, because the market can, after breaking out of this particular one, can go above and can get to this and reverse, just like what has happened here. This is actually a trend within a trend. Once there is a breakout, you need to watch out for the nearest resistance zone or resistive trend line that's also guiding the overall movement of the market on that particular time frame. All right, so there's another movement right here, still on this same time frame. Let me draw another trend line to show you guys. There's another movement here. At this point, you can see the three clear torches. The three clear torches on this. We have one here, we have two here, and this is the third one. Now, these things I'm showing you is something that if you go to a lower time frame now and you find a breakout, you might forget that there is a strong zone above here. There's a resistive trend line, right? Because if you go to, let's say, the 15 minutes time frame, this is a very far distance. Anyway, let me just go down there. We need to see these things clearly. Let's go to the 15 minutes time frame, then let's try to see where we'll have it. So you can see this is the trend line we are talking about. This is the current trend line, the last one I just drew. Then if you have a breakout here now, then the market continues moving, you might forget there is a trend line here. There's a trend line here that you have to look out for, because the market on breaking out of this one will mostly want to target here, and there's a very high chance the market on getting to this particular trend line can still sell back down, maybe to this zone, then continues buying to the upside. Depends on what the market decides to do, or based on your analysis, you'll be able to identify that. You see, so we do not have to forget about what we have already, because this particular trend line here, the first trend line I drew, which is this particular line here, is what actually controls the movement of the market. All these other ones you'll be drawing right here are just mere smaller trends that are happening within the main trend, and you can still be profitable just with these ones here if you know how to, if you get a good entry. Because if you go to a lower time frame, you find a good entry for this particular setup that you have here. All right, so Another one is like a consolidation. This consolidation may not just really be horizontal, although like when we have this kind of movements, this is actually a consolidation. This is actually a consolidation, but it is in a vertical direction. It is in a vertical, would I say, orientation. So in this case, we say it is a correction. We say it's actually a correction because the market is actually bearish. So this is impulse correction, impulse correction, like that. So this is actually a correction. So once you see this kind of things happening in the chart, then you need to wait for the market to break out of it. you know After market breaks out of this, once there's a breakout here, then you look for an entry. How do you get an entry? You look for the market, look for the nearest key level. Look for the nearest key level or other block. If you understand smart money concept, you look for the nearest other block that has not yet been mitigated, and then you try to trade it. Wait for the market to get to that other block, then you get your entry, or you get to the nearest key level in the market or a strong resistance zone, enter a trade. Mind you, this is happening on the daily time frame. So even if maybe you found your entry at this point where the market got to this level, because there's a key level around here, you can see the sells to the downside and the buys at this point. So even if you had entered the market at this point, then you can see that we had 2 days of bearish movement on this particular pair. Then you would have made some good money, without losing sight of the fact that the market actually started creating a kind of another trend right at this point. So if you're able to draw these lines as much as you can, then you'll be able to identify when the market is consolidating and when the market is trending, so you can wait for a breakout. You can see this movement here. This is another breakout right here. You can see there's another breakout right here. The market broke out of this point. Market broke out of this, then came back to retest. This is a kind of a strong level in the market. If you go down to a lower time frame, you'll see, because the market actually, after it came down, it got back to this level. So coming back to this same level, it can possibly sell. Coming back to this same level, it can possibly sell too. You understand, guys? So that is it, guys. You can see all you need to do is to learn how to draw these trend lines and identify areas of consolidation, whether horizontally or vertically. If it is happening horizontally, then you know it is a consolidation. If it is happening vertically, then you must understand the market is either moving, is either correcting, or the market is doing a corrective impulse or impulsive correction, guys. So even on the 4-hourly time frame, when you go down to lower time frames, you still find such opportunities like what happened here. At this point here, this is a kind of a consolidation, but this is an impulsive correction. The market, because the market sold impulsively, then started consolidating around this point. Any way the market consolidates, you have too many candles. You find too many candlesticks, mix of red and green candlesticks. There will be too many. Not that the market is actually consolidating or is actually correcting impulsively, or that is impulsive correction. So know that all you need to do is just to put a trend line, guys. Just put a trend line and wait for the breakout. Like here, you will need to put, sorry, I took the wrong line. I can use it anyway. The market, this is what you are supposed to do. Then you duplicate this and put another one if you want right here, although I would really concentrate on the direction I expect the market to break out from. So you can see what happened. This is a consolidation at this point, and this is a breakout. The market broke out of it, came back and retested this zone, and you see the massive buys to the upside. I have videos on how to enter trades like this. When you find this kind of opportunities, then you just need to go to some videos on this channel to see how to enter. Because if I would want to show you entry, it might take time. Although, in a very simple sense, just look for where after the market has broken out of the a consolidation, allow it to move and go above the previous lower high. Like here, this is a lower high, then it has to come back to a zone where it bought previously. Then like what happened here, you can see market came to this zone where it bought previously. You can see the massive buys to the upside. You see, guys, so these things happen every day and at different time frames. It happened on different time frames. And now you can see, even when the market broke out of that trend, there's another one right here now that market formed, which we have to look out for. This is another trend. The market moved. You see the breakout. Let me get this line. You can see the breakout. Market broke out of this and then went in again. This is the final breakout. Then it came back, went back into it, and still sold to the downside from where it had sold previously, guys. Although there was a break, there's something I'm seeing on this chart right now. The market did not continue that way. There was a kind of another trend somewhere here. There was a kind of another trend somewhere here. When you need to be dynamic, you need to follow the market, whatever it does. You see what the market later did. You see what the market later did. So after a kind of a consolidation, it broke out of this. Then on hitting this trend line, this is what I was saying. So if you were actually, like you didn't draw this trend line, let's say you didn't draw this trend line, then you just found this opportunity on the chart, then you marked this horizon, these lines here up and down here, which is kind of a corrective impulse at this point. Then after this breakout, you will expect the market to buy massively to the upside, although this is a 4-hourly time frame. Then if you're expected to buy massively on this time frame without note of the fact that there is a strong resistance zone, then there's a very high chance you will lose money, because on the market getting to this point, you see the massive spikes to the downside, see the spike, so you will blow up your account. So when you are trading breakout, you must always check if there's a resistance or a support zone above or below where the market is breaking out from. You need to always look out for that. Then as you do that, that means you need to be drawing your trend lines and marking out your key levels on different time frames. At least do it from the daily time frame. You do it on the 4-hourly time frame, do it on the 1-hourly time frame. Then when you go to your 15-minute time frame, which is personally my entry time frame, I have to take note of those lines I drew on those higher time frames, because I expect market to actually react on getting to that time frame. As it is now, market can still come over to break above this particular trend line, but if it breaks above this trend line, no, there's another trend line here. It can break above this, come back to retest, then come to break this one. So that is it. We have to be looking out for those. That's how you can trade breakouts. Just look for areas where the market is actually consolidating or the market is trending. Then guide them with lines. Guide that movement of the market with lines. Then wait for the market to break out of that line that you drew, and then come back to retest on a good level. But the retesting will depend on where the market is breaking out from, because I made a video here about not waiting for a retest before you go in for a trade. That works too, but it depends on where the market is breaking out from and where the nearest support or resistance is. If the nearest support or resistance is if the next resistance or support is far from where the market is breaking out, then you can enter a trade if it breaks out of that line and closes nicely, either below or above, depending on the direction. Then you go in to buy or sell. But if the resistance or support zone is very close to where the breakout is, then you need to wait for the market to get to that zone, then come back to retest, so you can sell nicely to the downside or to the upside, or buy, guys. So that is how it is traded. You can do this for all time frames. Like now, look at what happened right here on this 1-hourly time frame, guys. This is some 4-hourly time frame. Look at this. Although this is where the market started correcting. You see, so at this point, you can easily just after placing the line, you can just wait. Like I told you, the market broke out of this and came back inside. So normally, based on my strategy, I will want to wait to see the market go above this high, like what it did, came back and retested this zone. If you join this zone, you see this is actually a key level, and you see the buys to the upside. You see the massive buys to the upside. But even if you were waiting for the market to come to this level here, maybe to this level to start buying, then you see that the market is actually trying to consolidate at this point. Know that it's going to buy. Do not wait again for just get an entry around this point and you buy massively to the upside. Or you take note of the fact that there is an order block here. If you trade order blocks, you know that there is an order block right here that is actually causing the market not to come down. There's an order block right here where the market just dropped a week, then returned to the upside. So this is that's a breaker block. The market guys, that's a breaker block. Actually, I don't trade smart money, but I know these things. I'm just trying to tell you because I know you that is watching this video. Not everybody that is watching this video will be pure price action traders. Some will be smart money traders. So I need to mention these things too. So If you identify this stuff on time, it will help you to be profitable at times, So these things are very simple. Just try to guide the movement of the market. You see the market moving in a certain direction, like what is happening here. I can decide to join a trend line right now. Like here, I can decide to, let me see if that works. Let me take out these lines, so they're making the chart look dirty. You find this kind of movement on the chart. I would want to use something like this. Let me come. All right, something like this. Let me see if that works. Okay, something like this. So you can see the breakout. You see the market broke out and came back up and started selling to the downside. You can see the breakout at those points. The market came back up and started selling from to the downside. So you need to check out for the confluences that make this market, that you need to confirm that the market is going to retest at that point and start selling or buying depending on the direction of the market. All these things are very, very simple things, guys. They are very simple things. I will actually do a video about entry. I will specifically do a video about entry. Maybe in my next video, I'll take time to create a video about entry, because I know some persons are still having questions to ask based on what I've just done on this video, when to enter and when to exit. I am going to do a video on that. But meanwhile, the video is already too long. I wanted to make a very short video about this, and I believe you've got some value from it. Guys, please just like the video and subscribe to this channel if you've not done that yet. If you are just watching my videos for the first time, or you've been watching without subscribing, please just subscribe to this channel to help us grow, and also like the video so that the YouTube algorithm can share it to others that are also looking for this kind of information. Guys, share your thoughts in the comment section. Guys, so that I know what you really want. Then I can be channeling my content or my videos towards that, so that can help you grow in this trading career, guys. All right, so there's a link in the description of this video that will take you to my YouTube channel, to my Telegram channel, where I post some information, guys. So I implore that you click on that link, join the Telegram channel. Then if you need a one-on-one mentorship, you want to enroll in my mentorship, one-on-one mentorship, guys, click on that same link. And once you get to that channel, you will find my direct contact, where we will negotiate your mentorship training. Then after the negotiation, then once you take action, we can schedule your classes as soon as possible, guys, because I want to see you guys being profitable this year. This is April is just ending, and that's the fourth month of the year. So at least before the middle of this year, you should be making some good withdrawals from the rivers on a regular basis, guys. So do not waste time, do not delay. Pay for knowledge and start making money, guys. People are making money from this, guys. So stay blessed until my next video, guys. Peace out.